let's bring in Garima Kapoor, who's economist and senior vice president at Elara Capital. Garima, thanks so much for taking the time. We had a bit of a divided table in the morning. Both my colleague Hiral and I thought that you have to take this with a pinch of salt because you have to look at the base year as well. Neeraj, on the other hand, is highly optimistic that says that with GST 2.0 coming, the second half is looking even better than the first half. What do you think?
Well, I'll agree to both of them, partly. One, let's talk about the statistical angle to this. The first statistical angle is that the base was low, as you pointed out. And the second statistical angle to this is that you are seeing a deflator of only 0.5%. Imagine a normal deflator when inflation was not as low, and 8.7% on a normal GDP would have got you a real GDP of less than 7%. So technically, a very benign deflator is also contributing to a relative headline print of real GDP growth, which is quite robust than what people anticipate. Secondly, in terms of real factors, in terms of economic factors, 2-3 things have actually worked in this quarter. One is that you had a front loading of exports, mainly because in anticipation of the execution of the tariffs that were going to come from US. And second, you had a front loading of government spending, especially on the capex side. All this put together gave you a very robust print. But the second part of the question is it sustainable? Now, the deflator is going to remain benign for the third quarter as well. So you will continue to see a robust real GDP, even if the normal GDP remains sub 9%. But the second part of the question is that your GST-related boost that you got for festive season is going to contribute to a very strong increase in print in your consumption indicators. More importantly, post-festive, some of the high-frequency data that we are tracking, particularly auto sales, both PVs as well as the two-wheelers, are suggesting that post-festive there hasn't been a slump. There is a return of first-time buyer, and entry-level consumer is feeling better off post GST cuts and cuts in terms of income tax rebates. So net-net, I would say the third quarter and the fourth quarter print also remains supportive, thereby dragging your full year financial year GDP growth to above 7.5%.
Good morning, Neeraj here, and thanks for being on my side as well. But my question is this really, if personal spending was up 7.9% in Q2, wherein we know that a lot of it was on pause waiting for the GST cuts, right? And the full period of the GST cut-led spending would happen in quarter 3. So is your point about how that will embellish the GDP growth warranted? Yes. But could it be much better than what will happen? Because let's face it, both Q1 and Q2 prints have been far ahead of almost anybody's expectation.
I agree with you, but remember a couple of things in here. We're only looking at the GST cuts that happened or got announced in August, and hence there was some bit of choking up of anticipated consumption that will play out in quarter 3. But at the beginning of the year, you got tax rebates. You've also got interest rate cuts. Our estimates suggest that if you put all these 3 factors together, tax cuts, interest rate cuts, and the GST cuts, anybody earning up to 12 lakh rupees as an annual income would have seen about 7 to 7.5% additional boost with all these 3 factors put together. And remember, this all has happened at the backdrop of very benign inflation, especially food, that impacts your household budgets extensively, and a relative better off coming from wealth effect because gold prices have soared more than 50% this financial year. So all factors put together are contributing and not just GST. Now coming to your angle in terms of quarter 3, quarter 4, yes, consumption will show a very strong number, but remember same time last year, second half GDP print were at least 100 basis points more than the first half GDP prints. So the base that was supportive in first half is going to get somewhat adverse and difficult in the second half as well. And hence put together, while your headline number will look good, it may see some bit of mixed figure because of 2-3 factors that I mentioned.
Okay. Garima, good morning. Hiral on this side. Now, with all of this said and done in terms of the print that has come in, with what we would anticipate on the GST front in the second half of the year, you're talking about a robust growth. You're talking about record low inflation as well in the month of October. What does this take the RBI to? Because we just have the policy which is slated this week. Is it a fair, complex situation? And which side of the seesaw will they swing according to you?
In my view, they will cut. And I have 3 strong arguments for that. One is that RBI's monetary policy is an inflation targeting regime. Inflation is at record low. Even if I stripe off gold and silver, your core as we call, which is X of gold and X of petroleum product, is an all-time low, excluding the COVID period, number one. Number two, if interest rates are a nominal indicator and an anchor, your nominal inflation, nominal GDP, it's sub 9%. That is indicative of slack in the system and not really a very rosy and heating up scenario. And number three, and most importantly, if we are looking at a situation where all goods and services that are spent in the economy are a nominal indicator of where we are going, then by that logic, a very benign core inflation should tell you that we are suboptimal. Given the target that the governors himself set out, that we want to be more aspirational in terms of growth, remember the second half growth and more importantly, the next financial year growth is not going to look as rosy as the deflator is going to normalize and a base will be higher. In that context, is there a pricing power in the system that is reflective of the 8.2% print that we've seen? Answer is no. Now, if that is the case, then there is a room for us to cut rates.
Garima, I think we've laid out all of the important salient features for people to pay attention to. But of course, you can't capture emotion. And I think that's going to be high at the start on account of the GDP print. Thanks so much for taking the time. Pleasure speaking with you.